Today I'm on with George Lea, and we're going to look at the latest EdgeRater template that was delivered in December 2014, which is all about candle patterns that George uses to identify potential stocks for trading. So hi George.
Hi Chris, how are you this morning?
Very good, thanks. This template is under the category George Lea. So if you click on the category, you'll see the original three templates that were there, which were the daily, weekly, and monthly squeeze templates, and then this candle patterns template. And there are a number of scans in this template, and they're organized into bullish and bearish patterns. We have, and we'll explain what these are when we look at some of the charts, but we have clearing bars, power bars, inventory retracement bars, bullish engulfing, and bearish engulfing, marubozu, green candle lows, high close dogees, and then the similar thing for the bearish side. And also there are some indicators in there for linear regressions over a shorter period and a medium period, and moving averages, the 10 and the 50, and how close the close price is to those moving averages. So we'll get started by, it's just the same as any of the other templates. The way that you run a template, you select the template itself on the right hand side, select a symbol list, and we're going to use the weekly options list, which has been updated through January the 16th, which was last Friday, and then press run. Now this template takes a little bit longer than some of the other templates to run because of all of the formulas that are being calculated in here. There's approximately 20 different scans and indicators that are being calculated. So for this list of 400 stocks, and this is the list of stocks that have weekly options associated with them, and everybody has this, it's delivered with the program, you can see that it's probably going to end up taking something like 30 seconds to complete the scan. But once the template's run, it produces a report, and that report is then permanent on your hard drive, and you can load that back in at any time. So here's the result, and you can see the way the template's laid out here. We've got a section, the first section from column F through L is all about your bullish patterns, and then the second section is all of the bearish patterns, and the third section are the indicators that I mentioned previously, like the linear regressions and the moving averages. So the way this works is if any of the candle patterns scans are firing, then a yes is put into the cell associated with that pattern for the stock. So after running the template, you'll see there's a bunch of yeses scattered around here, but then we can organize this in a better way, and we can click on one of the headings. And what should we look at first, George?
Well, we did do the green candle lows on the weekend, so maybe we just look at green candle lows, because on Friday there was certainly a lot of stocks that fired in the green candle lows. So
okay, so I'll click on green candle low. First time I click on it, it's sorting in reverse sort. Then I'll click it again, and we get the yeses come to the top of the list. And as George said, there are a lot of stocks in this list. We go down to number 81, so it's approximately 80 stocks that have green candle lows firing. So let's bring up a chart, and we can sort of explain what a green candle low is. The chart I'm looking at here is your basic chart. It doesn't have any indicators applied. It is just a pure candlestick chart. And yeah, maybe you can explain, George, what the green candle low is.
okay, so basically a green candle low is usually an indication of a change in sentiment. So you've been in a downtrend, and you can see on the Dow you've been in a downtrend for a few days, and then once you get to a certain point, buyers started to step in, and so the sentiment has changed from being bearish to being somewhat bullish. So this doesn't mean there's going to be a total reversal change, because quite frequently you can get a green candle low and it can be followed up with a red candle and then a continuation of the downside. But usually your first indication that the psychology has changed is that you do get a low, and then you get a green candle forming after that low.
Okay. Let's take a look at a few of those. Scroll down through a couple quickly to show what they look like. There's another example, and another one. Several examples down here. Let's take a look at green candle lows in combination with another one of the scans. You think power bars would be a good one?
You may want to look at power bars as well. So
yeah.
Take all the green candle lows that also created a power bar on Friday.
Right, yeah. And the way that you can do that is you can use the filtering capability on these columns. So you can say, drop this box down here and just say I want to see only green candle lows, so I'll make sure that's a yes. And then in the power bar column I can drop down there and say I just want to see power bars as well. And now the items appearing in the list are stocks that have both power bar and green candle low. Let's take a look at some of those. Again, the diamonds are a power bar as well as a green candle low. Can you explain the power bar, please?
Okay, so a power bar, if you look at the range of the candle, is going to be a up power bar is when the close is within the top 25% of the range of the day, and a bearish power bar is when the close is within the bottom 25% of the range.
Right. So this qualifies because even though you've got a bit of a wick at the top here, it's still within the top 25%.
And it's usually a sign of strength because it closed close to where the high of the day was.
Right. And we were talking before that marubozu, which is the column here, that is the candle which is fully green. Essentially a bullish marubozu is a candle that is fully green, right? It starts at the low, open is at the low of the day, and the close is at the high of the day. So you're guaranteed that if it's a marubozu, that it will also be a power bar. Correct?
Correct.
Yeah. And we can see that if we take off the filters of this and take off that filter as well, clear that filter. So I clear that filter too. And then if I sort by marubozus, and we'll show you what a marubozu looks like on the chart. Okay. So it's pretty much the low is the open is the low and the close is very close to the high. That's what they look like, and you can see that every one of those marubozus where it says yes is also a power bar, every single one of them, right down to here. But if it's a power bar, it doesn't mean it's a marubozu, because of the rule, the power bar being 25% has to close within 25% of the range. We can go back to our sort that we had before. We might want to explain the clearing bars. Clearing bars came from an article that was in Technical Analysis of Stocks and Commodities that was written by Ron Black and George. Can you explain what the clearing bar actually is, and we can take a look at some of those too.
Okay, so a clearing bar is usually an indication that the trend has started to change. Okay, so when you get a green candle low, you can't possibly have a clearing bar because that's usually going to be a lower high. And so here you can see a chart of ATVI, and it becomes a clearing bar because it's cleared the lowest high. So in an up move, a bullish move on a clearing bar, we're looking for a close above the lowest high. And on a bearish move, we're looking for a clearing bar that's cleared the highest low. So Chris is going to show you that with his signal line, and he's going to show you how to put the signal line on as well. Okay, hopefully that makes sense. You've actually started a move that's away from wherever it is. Now there's a few other things that I like to see in terms of these clearing bars and these power bars, and this relates to the 10 EMA. So I won't take a clearing bar trade unless it's gotten above the 10 EMA, or the 10 moving average. Okay, and the same with the power bar. I want to catch a power bar that's in an uptrend.
Okay.
So, and Chris can do that with the EdgeRater.
Yeah, and we'll just put the swing line on now, and the swing line is related to the clearing bar, and it's an indicator that is used really to detect when the clearing bar has occurred. And so clearing bars will become a lot clearer actually when I put this indicator on the chart. So if you look under chart scripts and then look for swing line, drag that over into the chart area, and you'll see that we now have this red line on here. So as the price is moving down, you see where the red line is at the high, essentially, of each bar on the way down. These are lower highs, and then this bar here is completely above the swing line, and that makes it a clearing bar. And we can take a look at some of the others. This qualifies as a clearing bar. As we see the red line coming down here, you've got lower highs. And then this is the first bar, this green one here, that is completely above the swing line, essentially making it a clearing bar. And come down to a few more. So again here, the bar prior to that doesn't qualify because it's essentially going through. The range is actually crossing through the swing line, so it's only this bar that's on the right hand side of the chart is actually a clearing bar. Look at a few more of these, and that's on the upside, and then the downside would be clearing bars, negative clearing bars, and I can sort for that. Just come over to the bearish side, click on that to bring the negative bars, the bearish clearing bars, to the top, and let's take a look at a few of those. So here's an example. You can see the red swing line, and then the bar on the right hand side of the chart is the first bar that completely is the range of that bar is completely below this swing line. So the red line in this case, when we're in the up direction, is always pegged at the highest low, and then this is the first bar that's completely below the highest low, indicating a potential change in direction. Let's take a look at a couple more. This qualifies 2. This qualifies 2. You can see the two prior bars prior to that did actually, the range crossed over this swing line, so they're not actually clearing bars. This is the first bar that is completely clear of this set of higher lows. And then, as George was saying, he's interested in clearing bars that are also, if we're talking about the bullish side of things now, let's bring bullish clearing bars back into view and bring my chart back so you can see what I'm looking at. So George would only be interested in trading clearing bars if they're also above the 10 moving average, 10 period moving average. So we can add a 10 period moving average to the chart by looking at our chart scripts, going down to our moving average, dragging that over to the chart, and then the moving average is the green line. We need to set that to a 10 period, so we open up formula parameters and take that down to a 10 period. And so now this Activision does actually qualify because it is a clearing bar that is also above the 10 period moving average. The chart itself, I mean the template itself, has on the right hand set of columns a bunch of indicators. So we've got the linear regression, the short term linear regression, which is your 5-day, and then a medium term 21-day regression. So from here you can tell the direction of the stock over the short and medium term. We also have columns for the 10 period moving average, and the column next to MA10 is C%10, which is the close in relation to the 10 period moving average. So if that is a positive number, then we know that it is actually above, the close was above the 10 period moving average. So if you're looking for this particular setup, you might then filter this C%10 by greater than 0, because we're only interested, remember, in the bullish case of looking for stocks that are clearing bars and also above the 10 period moving average. So now, and let me filter this, so we're only looking at clearing bars, yes. So now we only have a handful of stocks from this list that qualify in that case. Remember, this is now set to pick out stocks that are clearing bars, positive bullish clearing bars that are above the 10 period moving average, where the close is above. So this qualifies as being a clearing bar because it's completely above the red line, but it also qualifies as being above the 10 period moving average because the close is above the green line here.
And you can see this is also a power bar, so you have a combination of a power bar plus a clearing bar, which is a quite powerful combination.
Right. And actually that also qualifies as a marubozu, because it's a green, almost a full green candle. So I have a few. There's Barrick Gold there, BP, Kinross Gold. There's quite a few golds have come up in this list.
Yeah, and you also have some oil and gas type stocks in there as well.
Right. Then we can take a look at the other types of candle patterns we have in here. Are these IRB, and that stands for Inventory Retracement Bar, and that is a terminology that's come from Rob Hoffman, and he's done several presentations in Las Vegas at the Traders Expo, which I attended in November last year. And so the inventory retracement bar criteria, let's bring up some of those so we can see what they look like. I'll just clear this filter, and you can always tell if a column has a filter applied to it because it will have this little filter icon. So right now I can see that the only column that has a filter applied is the close C%10, and I can take that off just by opening that up and saying clear filter. And now let's take a look at inventory retracement bars, and we can see what they look like. What's the definition for the inventory retracement bar, George?
Okay, so an inventory retracement bar is where you have a range on a candle where it would be a bullish setup if it had the wick on top, and so you want to see the close 50% or more down the range of the candle. And in a bearish setup, you'll see the wick on the bottom of the candle.
Right.
And so you want to see a close up at within the top 50% of the range on the candle.
Right. And when I heard Rob talk about inventory retracement bars, what he looks for is for price to, for instance, in this case, we have this big inventory retracement bar, and he was talking about the idea being that when prices have gotten higher, then there's been a lot of supply, a lot of inventory in the market, and it's been sold to to meet the demand, and it's pushed prices down again. So he thinks it's very bullish in this case, or bullish in this case, if price actually gets to be above the high of this inventory retracement bar, and so that would be something like a continuation play potential.
Right. So you've had basically the sellers have taken control, and so once you've exhausted the selling, and the bulls take over or the buyers take over, once the buyers can take price above the previous high on that wick, then you have the probability of a very strong continuation.
Right. And if anybody's interested more in inventory retracement bars, then Rob Hoffman he runs a website called becomeabettertrader.com. So that's where you can get more information about those. And we've talked about clearing bars, power bars, inventory retracement bars. We haven't talked about bullish engulfing. We'll look at that next. and we'll also look at high closed doji as the last thing. So let's look at,
Yeah. So because of what the market's doing, we may want to look at the other bullish one, which would be a low closed dogee. So if we had some low closed dogees on Friday, then we might be interested in seeing if those reverse.
Okay. I'll quickly go in order though and do the bullish engulfing, just to refresh people about what a bullish engulfing pattern is. And so yeah, let's take a look at a couple of these. Let's get a good example. Bullish engulfing, and that is that the current candle completely engulfs the prior candle. Is that correct, George?
That's correct, yeah.
Yeah, and the bullish one being it engulfs it, and it's a green candle. So you see, these are good examples of bullish engulfing. So engulfs the body of the prior candle, not the entire range. And then if we take a look on the bearish side, we get some bearish engulfings, and naturally not many of those around, but here's one example. Financial bears, 3x.
Yeah, so for on Friday, FAS was bullish engulfing, so you would expect its inverse FAZ to have a bearish engulfing.
Okay. And now we're going to take a look at high closed doji and low closed doji. And I'll sort this list now by high closed dojis, and we'll see the stocks that currently have a high closed doji. And let's just take a look at a chart of the high closed doji. And the high closed doji comes from John Person, and I've seen John present at the Las Vegas Traders Expo, and he was also at Jeffrey Scott's seminar last June, and he told us about the high closed doji. So what the high closed doji is whenever you see a doji on a chart, which is a period of indecision, so you get a body surrounded by a low wick and a high wick, as in the case here, and then within 3 or 4 bars of that indecision you get a bar which closes above the high of the doji. That's called a high close doji. So what we're seeing here is we've got the doji a couple of bars ago, and then this bar we have got a high close doji. The idea is that it indicates a point where the stock may be turning around. So let's take a look at a couple more of those. So another case of there's a doji 2 bars ago or 3 bars ago, and then the current bar is closed above the high of that high of the doji bar. Another case here. In this case, this is a stock that has been going up. It has had this doji indecision bar, and then another doji indecision bar here, and today's bar closed above the high of that doji bar. And if you go through this list, you'll see that these are all cases where today's bar has closed below or has closed above the high of the most recent doji bar, but the most recent doji bar must have been within 3 or 4 bars prior. And on the other side of that, for the low close doji, let's bring up that. What that is you've got a doji bar, and then the close of the current bar is lower than the low of the doji bar, and the doji bar must have been within 3 or 4 bars. So in this case, it's the doji was 2 bars ago, and today's close, or the last close I should say, was lower than the low of that doji bar. And all of these 7 or 8 stocks will have that characteristic. We'll just go down through that list and you'll be able to see those. So that's high and low close doji. Well, I think we covered the template pretty well. So I think everyone can see that it's very easy to use this template. It's simple in that you just run it, and then once you have the information in the template itself, or in the report that's produced from running the template, you can do all sorts of sorting and filtering to find the things that you are particularly interested in. and it's also useful, as we saw, to use these indicators so that once you've found a candle pattern that you're looking for, you can then see if a stock is in a potentially a short-term uptrend or downtrend, or how far the close is above or below any of the moving averages that are in here too. So very excited to have produced this, and I think it's going to be super useful going forward, and I know that we're going to be talking about this a lot more with George at the various webinars and seminars that are coming up in the year. So thanks very much, George, for coming online and helping to explain this template.
Okay, you're quite welcome. And again, if you don't have EdgeRater yet, I think Chris has created a really powerful and useful tool, and I can't say enough good things. Every time I talk to Chris, he's working on another template that I think is really helpful in your trading. So we should all be thankful that we have a Chris around to create tools like this and programs like this.
Okay, thanks a lot, George, and
okay, you're very welcome.
We'll catch you next time.
You
Okay,
bet.
bye-bye.